everybody. Today I'm back with another important video. I think today the company which I'm going to discuss about has been very much in news from last 1 year, especially due to pandemic. And most recently, it has been under severe selling pressure, and it has come down a lot from its recent highs. So I just wanted to share my thoughts and just also wanted to know your opinion. What do you think about this company? Whether it's a good price to buy or should we wait? So this company has also been very popular with ARK Invest, Cathie Wood stock. The company operates in healthcare, especially in the telehealth. The name of company is Teladoc, ticker symbol TDOC. So this is a very important company, especially in telehealth. During pandemic, there was a huge demand of virtual visits with the physicians because of Rona situation, and this company gained a lot of popularity. And this company is very popular in virtual healthcare, and most of its clients are insurers. Teladoc is a giant in virtual access to high quality healthcare, and they're probably the biggest one. And so let's discuss in detail about this company. As I mentioned, company stock came under severe selling pressure, possibly due to reopening. Many investors think as economy reopen, there may not be as much need of virtual health, and the share price has been trading pretty low from recent highs. But I believe the pandemic has changed consumer behavior, and telehealth is here to stay. And it's a very fragmented market right now, but I think as it will mature, there'll be a huge demand for telehealth. And this market is supposed to grow at a cumulative annual growth rate of 16.9% from 2020 to 25. So there's a significant growth expected in telehealth. So let's have a deep dive into this company and see if it's worth investing or not. So let's see if it's currently it's trading around 151.90 US dollars. At one point it was trading 308 US dollars, but you can see there has been a lot of selling, and current price is almost less than half. Company has sold off quite a bit, and currently it's in oversold category. RSI is sitting around 27, pretty much oversold, and it is trading below 50 and 200 days moving average. So it's getting interesting from here. So Teladoc, their business model is one of the most mature business in telehealth. So Teladoc is one of the most mature. I think it's a top one in telehealth. They offer telehealth in 450 specialties, which is pretty broad, and their care is both in urgent care and chronic care management. They have recently acquired Livingo, which more focused on chronic care management. So that also offers them cross-selling opportunities with Livingo. Most of their customers, they have been focusing on business to business strategy, especially for insurers and self-funded employers who are very cost conscious, and it helps them drive cost efficiency. Around 450 million members, and it's pretty wide network globally. They have 50,000 providers, and their platform that can connect patient with the healthcare provider within 10 minutes of median response time, which is pretty incredible. And their service is available throughout the year in key segments throughout the year, every week, around the clock. Major advantage for Teladoc is they're one of the largest, and because for small competitors, it's very difficult to compete because the barrier to entry is very strong, because it's highly regulated market, and each state has their own regulations, and to navigate those complex regulatory environment is very difficult for small players. And I think Teladoc has an advantage in that sense. Most of their revenue models, primarily it comes from their membership fee. They charge, I think, $1 per month per member, and other revenue comes from the virtual visits, and small revenue comes from international. There's quite a bit of opportunities in the international in the market. So why should we buy Teladoc? Share price is currently undervalued. Its share price is currently undervalued. According to Morningstar rating, they are undervalued. Their fair value is $225, and currently it's trading around 151 US dollars. Also, according to Zacks research, the fair value is 181 US dollars, which is quite upside from here. A strong first quarter 2021. So revenue was 454 million US dollars, which was higher than the estimate, the 161% year-over-year growth. Very strong guidance for rest of 2021. They're expecting revenue of 1.97 to 2.02 US billion dollars, which is 82.3% year-over-year growth. Both memberships and virtual visits expected to grow, which is nice for the business. And they have greatest opportunity to expand into international markets. So right now they're very limited. They have been acquiring a lot of companies ever since 2002, since they started. So most recent is Livingo in 2020, which they have been integrating with their platform, and which offers them cross-selling opportunities with different customers. Last but not the least, the telehealth market is expected to grow at cumulative annual growth rate of 16.9% from 2020 to 2025, from 25 billion US dollars to 55 billion US dollars, which is quite upside from here. Being a leader, they are well poised to gain from this growth. So no company is devoid of risks. Virtual health market is still very fragmented, and there's a lot of risks, regulatory risks. There are different states, and they have different regulatory requirements. And Teladoc is also trading at relatively higher evaluation versus its peers in the industry. So that means they have to execute really well to meet shareholders' expectations. And Teladoc is still not a profitable business. That means they have to still generate positive earnings. We expect they will be profitable in year or 2 years, but right now they are unprofitable, which poses risk. To expand into international market, again, this is very complicated market, and to navigate through it, they will need to really execute really well. On top of that, Teladoc also has debt obligations. They're very right now highly leveraged company. Currently, they have 1.35 billion US dollars debt on their balance sheet. So Teladoc is a leader in telehealth space, and I think they have to execute really well to be profitable and return equity to its shareholders. But with the reopening of economy, I expect them to still face some selling pressure. So you have to weigh your risk and rewards, whether you want to buy this company or not. But trading at 50% lower from its recent high, I think it might offer good opportunity to buy into this company. I hope you liked my video, and if you like my content and like my videos coming to you, please do subscribe to my channel. Have a good day. Bye-bye.